Right now, in the world of artificial intelligence, there's a race happening. But it's not about who can build the smartest model, it's about who can spend the most money. The biggest names in tech are betting hundreds of billions of dollars on one single idea, that to own the future of AI, you have to build a massive infrastructure for it today. But what exactly is the prize here? And maybe more importantly, is Wall Street even on board with this incredible gamble?
So, here's how we're going to break down this high-stakes race. First, we'll look at the sheer scale of the spending. It's wild. Then we'll rank the key players to see who's writing the biggest checks. After that, we'll dig into the logic behind these bets, see why the markets are getting so nervous, and finally, we'll try to figure out what grand prize they're all chasing.
Okay, first things first, we need to get a handle on just how much money we're talking about here. And I mean, we're not just talking about big numbers. We are talking about truly staggering, almost incomprehensible sums being poured into the foundation of AI.
Just look at this number, nearly $700 billion. That's the projected capital expenditure. Money spent on physical stuff like data centers and servers for the year 2026. And get this, that's not the entire tech industry. That's just 5 companies: Amazon, Google, Microsoft, Meta, and Oracle. A number that big, well, it raises a pretty huge question.
So who exactly is writing these enormous checks? Are they all just playing the same game, following the same playbook, or do they have different strategies hidden up their sleeves? Let's break down who the key players are.
All right, let's line them up and see who's who in the spending frenzy. When you actually look at the projected spending for 2026, you start to see a very clear hierarchy emerge in this AI arms race.
The ranking here is pretty fascinating, right? Amazon is way out in front, projecting a massive $200 billion spend by 2026. Google is right on its heels. And then you have Microsoft and Meta also committing well over $100 billion each. You got to remember, these aren't just abstract figures on a chart. This represents a frantic, physical race to build the data centers and buy the hardware that's going to power the next generation of AI.
So what is the logic here? I mean, why are these already successful companies spending money at a rate that makes even their own investors a little bit queasy? Well, the answer lies in what they believe is about to become the most valuable and the most scarce resource of the future.
And that resource is something called high-end compute. Basically, it's the raw, immense data processing power you need to build, train, and run these incredibly sophisticated AI models. You can think of it like the new oil or the new gold in this digital revolution. It's the fuel for the entire AI ecosystem.
In this quote right here, it gets to the absolute core of the belief system in the tech world. The thinking is pretty simple. AI is going to change everything. When it does, high-end compute will become incredibly scarce and unbelievably valuable. And in that future, the only companies left standing will be the ones that control their own supply. So they're not just buying servers, they're buying their survival. But not everyone is convinced this is a good idea.
And this brings us to the central conflict of the whole story. Because while Silicon Valley is bracing for a future where compute power is everything, the people who actually invest in these companies, yep, Wall Street, are getting incredibly nervous about it.
And here's the fundamental clash. On one side, you've got the tech giants saying, look, trust us. AI is the future, and spending this money is totally non-negotiable if we want to win. But on the other side, you have investors looking at the balance sheet right now and asking, where's the profit? This spending is just, it's too high. When do we see a return on this? And this isn't just some theoretical debate. It had real consequences. After these companies announced their massive spending plans, their stock prices plummeted. In fact, there was a direct correlation. The more a company planned to spend, the harder its stock got hit. And this happened to everyone, even companies like Amazon and Microsoft that have really clear ways to make money from AI. For investors, the numbers were just too big to stomach.
Which, of course, brings us all the way back to our central question. With this much money on the line, and with so much skepticism from the market, what on earth is the ultimate prize that could possibly justify this colossal, jaw-dropping risk?
See, from inside the tech bubble, the argument is really simple. If you truly believe that AI is a shift as fundamental as the invention of the internet, then backing down now just because Wall Street got a little nervous would be a historic, company-ending mistake. For these leaders, the risk of not spending enough is way, way bigger than the risk of spending too much.
And that leaves us right here with the trillion-dollar question. These companies are betting their entire futures on a resource they believe will one day be priceless. But as the costs climb higher and higher into the stratosphere, you have to wonder, in the race to build the engine of the future, is there a price that's just too high to pay?